Richard Murphy, and I want to talk about why we need reform of Companies House, which is the government agency that runs what is called the Register of Companies. Now, the Register of Companies is really important because there are more than 4 million companies in the UK at present. And what the Register of Companies does is, first of all, confirm that they are in existence. Literally, it provides them with their certificate of incorporation, which is the equivalent of a birth certificate for a person. And these are legal people. And then what it requires is that certain information be put on public record. So, who owns the organisation, at least if they own more than 25% of it, and who manages the organisation, the directors, in other words, and what does the organisation do. That means that companies have to put some form of accounting on public record once a year to confirm what they've got up to. Now, this is what I really want to talk about, because accounting is my thing. I've been a chartered accountant for nearly 40 years now, and I wanted to be an accountant because I believed that accounting information provided people with the information that they needed so they could make good economic decisions. Well, more than economic decisions, in fact, because my interest first arose from a social history perspective. And that was literally as a teenager, where I saw that the impact of the development of the company on communities that things like railway companies and large corporations served was really significant. And even then I appreciated that this accounting information made a difference to the way that we might behave. Now, as a consequence, I've always believed that companies, large or small, should put their accounts in full as prepared for their shareholders on the public record. And there's good reason for that. Limited liability companies create risk. The risk is that the company is provided through its shareholders with literally a limited liability. In other words, if the company goes bust, those shareholders do not have to make good the deficit, and instead somebody else in society does. Now, that transfer of risk, which could be abused, creates what is termed moral hazard. In other words, there could be an incentive for one person to do this at cost to another. And we therefore need protection from that potential abuse. Now, who does need protection? Traditionally, it was believed that it was the shareholders who needed protection from the management of the company because the shareholders and the management were presumed to be separate from each other. And right at the beginning of company history, that was true. Very wealthy people did not want to get their hands dirty with such a sordid thing as trade. That was literally for the people who came around to the back entrance of their houses. But they did want to make the commercial returns that arose from trade. So there was a separation between the management of companies and the people who provided them with their capital. But over time, of course, that broke down. People who were wealthy were very often those who had made their money through managing companies. So that separation became less significant. But another separation became more significant, and that is between the company and what we might call its stakeholders. Who are they? Well, the stakeholders are everybody other than the shareholders. They can be providers of capital other than shareholders, so banks and lenders. They can be trading partners, the customers and the suppliers. Customers because, of course, there might be ongoing obligations arising as a result of a sale. The past, the present and the future employees of the company are stakeholders, of course, with regard to pensions, with regard to their current pay, and whether they simply want to work for this organisation. Regulators are stakeholders, and there are a horde of regulators who have an interest in companies and want to determine whether any company might be within their remit, and therefore public accounting data is important to them. Tax authorities are also very interested in these accounts. Now, of course, tax authorities can demand the accounts of any particular company within their country, but, and this is a very important point, they don't necessarily only deal with companies within their own country, and therefore they do need to have data on public record to ensure that they can get the whole story about a group of companies in which they might be interested. So data on public record is important to them, and so of course is it important to civil society. Civil society is you and me and researchers and academics and local authorities and NGOs and civil society organisations and so on, all of whom might have a very good and valid reason for being very interested in the affairs of a company without ever having a contractual relationship with it, but still nonetheless could be caused harm by it. And we've seen ample evidence that companies can cause harm without there being contractual relationships in history. Just think of environmental damage and you'll understand exactly what I mean. And as a consequence, they too have an interest. Now, what has happened over the years is that this information supplied to the shareholders as being the party of supposed primary concern by a company when preparing its accounts was once put in full on Companies House records, but from the 1990s onwards has gradually shrunk in terms of the scope required to be recorded on that public record, to the point where over 90% of all companies are no longer required to put their accounts on public record in full and can file either literally very limited sets of accounts with no trading information whatsoever at all recorded within them, or abbreviated accounts which much reduce the amount of information that is put on public record compared to that which would be put in the accounts for the shareholders if they really wanted a full-blown set of accounts. Put those two together and we simply don't know what is happening inside the vast majority of companies that make up corporate UK. Now you might say that's the smaller companies, and of course it is the smaller companies. These exemptions apply to smaller concerns. But the truth is that those smaller concerns employ maybe half the people in the UK and make up nearly half of the total GDP that is generated by the UK private sector. And we don't know what's going on. I don't believe that's good enough. And the fantastic thing is that the government has heard this message, and it now has out a consultation which is suggesting that we should be putting full accounts of limited companies back onto the public record, at least their trading data, and maybe literally all the information supplied to shareholders. I warmly welcome that. I also warmly welcome the fact that the government is for the first time recognising that it has a responsibility to check this data rather than simply file this data, which is a fundamental step forward in challenging the fraud that goes on through UK companies, which I have drawn attention to for years and was told did not happen, and which is now acknowledged to exist. So, what's important? Well, the important thing is that there is a consultation that is open at the Department for Business Enterprise Innovation and Skills, BEIS as it's called, which you can contribute to. I have put links below this YouTube where you can find documents that you could fill in and send to them with an email address already on it. And if you did that, you could contribute to the public debate on this issue and say, you too want this information so that you can know what is happening in your community with the companies that are trading within it, or you could find out what is happening in national concerns that you weren't even aware should put accounts on public record. This way, you are protected from those companies because they have to account to you for what they do. That's enormously important in terms of your rights, and I hope you'll be really interested in doing that, because this is a big step forward in corporate accountability in the UK, which impacts almost every type of concern that most people have, whether it's fraud, illegal trading, tax non-payment, simple corruption, or the externalities, things like the environment and risks because of planning and all sorts of other things that people want to know about. Please ask for public data to be provided on our companies. Let's have transparency, accountability, and a fair market for everyone based on this information. Thanks for watching. If you're interested in what I've been saying in this video, please subscribe. There is a button below the viewing screen. If you're interested in what I have to say on Twitter, I'm at Richard J. Murphy on that medium. If you want to look at my blog, that's taxresearch.org.uk, and we have a Facebook page as well, Richard J. Murphy. So one of those things will get you more information on what this video series is about, and I hope I'll see you again soon.